At no point in history have we had moments of 100% certainty. There's always some amount of adversity and challenge, but never in most of our lifetimes have we seen so many countless potential events on the horizon. They are all adding up to the perfect storm. The question is, are you ready? You came here for the truth. Today we are going to look at several pieces of information, several charts. It will be very informative to you. Let's get into it right away. Looking at the chart on the left-hand side, what we have here is the GFIM bond index, now a $51 trillion market. One of the biggest bubbles ever in history is the current bubble that we have in government debt. Can you believe it? That governments can issue debt and make a hefty profit off of it. And that's what's been happening. In fact, even when governments give a negative yield on their debt, investors still buy it up like crazy. That's what we've been into for the past several years here. I mean, this chart's showing you back from 97, but it goes far, far beyond that. If the Federal Reserve, if other central banks change course from their program of reducing interest rates, and it looks like they're starting that, this will be disastrous for the bond market, and it will take down all other markets with it. That's not me trying to instill fear in anyone. You believe what you want, but when you have a major bubble, understand that the dominoes fall. Looking at the chart on the right-hand side, the housing market has appreciated significantly. All major housing markets are at levels above the 2007 pre-global financial crisis highs. Doesn't surprise me, especially being from Canada. I can see this every single day. Up 67%, Germany 32%, and so on. Canada has no economy other than the housing market. So, of course, the government has been allowing this to continue for quite some time. And while interest rates have risen a bit, we have seen the housing prices go up to degrees that just defy gravity. And it won't really stop anytime soon until they're willing to really increase interest rates. We've seen these small fractions that have happened, but they have to increase at a much faster rate. They have to do more, but they won't. They'll let the bubble continue to grow and grow, pricing out people from their ability to ever buy a home. Most people are unfortunately convinced that they will, many people will not be able to buy homes. Okay, that's just the way it is. Let's go on. Total global debt, all sectors. This is in trillions. Q1 of each year, comparing the different countries across the world here. All I wanted to know was this. Global debt. Some would say that we owe it to ourselves, therefore, there's nothing to worry about. But I would say to those individuals, look at what debt does to the average person. They can say, look, I don't need to worry. I don't need to worry about debt. I can go in more debt and more debt and more debt. But the collection agencies keep calling. They start to lose the ability to do certain things. In fact, in the US, memory serves correctly, they were going to, maybe this hasn't been implemented, but start restricting travel if you owe taxes and other things. And of course, if they haven't done it already, they will do that. And the amount of debt that corporations have gotten themselves into, the amount that nations and cities and states, and look at what happens to people's pension funds as a result. Oops, you forgot about that one, didn't you? Pension funds will be lost, will be cut back because of debt. Moving on. A $27 trillion dollar growth in global GDP will support a $300 trillion increase in total financial assets by 2020. Oh, how I love these charts. Basically, it's comparing at the bottom here real economy versus the financial economy. These numbers, maybe they're accurate, maybe not. Doesn't really matter. Coming from national stats, IMF, OECD, and so on, what you'll see is that governments get themselves into more and more debt. They get themselves into more financial trouble. The same with all of the corporations, individuals, all the way through the line. And the more that the debt expands, the more these financial instruments expand. They are one and the same. And you can't make this stuff up when there is fractional reserve banking, when and then on top of that you have the derivatives. The system is a fraud. And I love the fact that they draw this as an upside down pyramid, because that's what I did for my first book. You know, we have this real sick economy where nothing makes any sense, and the whole world is built around a fraud. Nobody sees it. This right here would be real assets. This one right here, fractional reserve banking. And this here is the derivatives, and essentially trying to show you, not the scale, how things are. You have a very small amount of real assets supporting the big giant bubble on top of it. What do you think is going to happen? Maybe not today, maybe not tomorrow, maybe it's 10 years, maybe it's 20 years from now. I don't know. I don't know when it's going to happen. But you can't do this forever. And people think, look, hey, whatever, no big deal. They have had crashes in the past, and everyone turns out just fine in the end. Well, let me tell you something. That may be the case. However, there's never been a bubble this big. Every single crash that happens, it gets worse than the one before it. Every single time, the government reacts even more. The Federal Reserve acts even more. So we know that the next one we'll experience will at least be worse than the global financial crisis that we experienced a few years ago. Now time is flying by quickly. That's what I'm trying to warn about. It's not the fact that it won't happen. Sure, we always have these crashes, but it's going to be a lot worse. Growth of global non-financial debt versus GDP. Does this surprise anybody for even 1 second that while the GDP has increased to a great degree, the amount of debt, non-financial debt, that is experienced is to such a... the ratio is ridiculous. It doesn't make any sense. Where you can have all of these different, I don't want to call them assets. I always struggle with this word, assets, expanding far beyond the debt, expanding far beyond the GDP. And the GDP itself is fake. Debt to GDP is rising fast. Once again, comparing all of these different countries, up and away. Nothing new. Let's move on. Surging debt. China's total borrowing has risen to about 260% of the economy. Corporate debt as a percentage of GDP, and banks' debt, and household debt, and everything else. Well, lo and behold, I have a similar chart to show you in a similar direction where everything is increasing, but that's okay because nothing bad can ever happen in China. A lot of people think that China will not experience a downturn, but I assure you, they will. There will be setbacks along the way. However, it looks that China will be 20 years, 30 years down the road, better off than it is today. I'm not denying the growth potential of China. I wrote about it in my first book. But don't ever think that what you experience today may be totally different tomorrow. You can wake up tomorrow and everything has changed. But of course, most people have quite a short memory. and they tend to forget very easily. In fact, if you look at real estate, for example, in Canada, it's basically been rising since the early 90s, and it's just been going up and up and up. So real estate agents who have been working in the field and those in the financial business or loans and everything else, mortgages, the majority of them that have been working since the 90s right through have experienced decades of persistently low mortgage rates and increasing housing prices. So what do you think they're going to tell you? What do you think they're going to believe? What do you think they're going to write about in the articles and the mainstream media? And they get pushed out, and the propaganda gets out there and into your minds. But you don't realize that, but you see it every single place you go. It gets inserted into you, and you don't realize it. It's all subconscious, but that's what happens. You cannot deny the end result. Let's move on. Okay, so Moody's downgraded China a few months ago. No big deal. S&P does the same thing. No big deal. And the majority of people agree with that statement. That's no big deal. And for me, the rating agencies are a complete bunch of BS. So we don't need to care too much. However, the stock markets and everything else that are all interconnected, they care about this type of stuff. So it is interesting to see that both of these have downgraded them. I don't know where this is going to go. Probably not very far, but the US got downgraded, and it was a little bit of an issue for quite some time there. So we'll see. Just wanted to mention it. And last but not least, this. Now, the Federal Reserve released their statement about what they wanted to do. They're going to unwind their balance sheet, and they're going to save the day. That's right out of the Federal Reserve's own website, you can see what they wrote instead of just looking at the mainstream media. But essentially what they said is, for payments on the principal that the Federal Reserve receives from maturing Treasury securities, the committee anticipates that the cap will be $6 billion per month initially, and will increase in steps of $6 billion at 3-month intervals over 12 months until it reaches $30 billion per month. That is incredible. Wow. So great. The Federal Reserve is going to pull back on their balance sheet. Let me tell you something right now. I don't make predictions on this channel. There's two things I want to mention. I've mentioned them in the comments, but I wanted to be very clear about this, okay? If they pull back on their balance sheet, and they actually do this, number one, other central banks will step in and buy it up. This is my beautiful writing here. Number two, potential. The Federal Reserve actually does cut back, and we experience another global economic collapse. All right. So we go from the financial crisis into the financial crisis part 2. That's what I would say. Either way, it's bad, because you just basically shift that garbage from one area to another, or you purposely draw from liquidity, crash the economies, destroy the stock markets. Those with the money are able to get in, buy up all the assets for pennies on the dollar, and they will be successful at what they're doing, because they always are, because they're in control, because they own the mainstream media, because they own the financial markets and every single thing in between. Never believe that these people don't hold the control. They can crash the market tomorrow using liquidity. That's how they do it. That's all for this video. If you found it informative, please give me a thumbs up. I post videos every day, so you definitely want to make sure that you're subscribed to the channel. Last but not least, if you found this video informative, I know you will find my books even more informative. You can check out my first book, which is about the 4 asset classes and how to profit from them, and my newer release, which is about reducing your monthly expenses and how to become self-sufficient. You can check these out at Amazon. Links are in the description below. Take care.